now propose to do is to just briefly state about the growth and the inflation scenarios, and I will then try and sum up the broad approach which the monetary policy committee has taken, and I think that will give even greater clarity of what the monetary policy committee is doing. So let me first take up growth. As stated earlier, India's real gross domestic product, that is GDP, is expected to have recorded a growth of 7% in 2022-23. Hence, economic activity remains resilient. On the supply side, Rabi food grains production is estimated to increase by 6.2% in 2022-23. PMI manufacturing remained robust at 56.4 in March, recording expansion for 21 consecutive months due to favorable domestic demand. Service sector activity exhibited buoyancy. PMI services remained in expansion zone at 57.8 in March, driven by favorable demand conditions and new business gains. Aggregate demand conditions were resilient in Q4 of 22-23, even as private consumption showed some signs of slowdown. Urban demand indicators like passenger vehicle sales and credit card spending registered robust growth in February, while consumer durables contracted in January. Rural demand indicators such as consumer non-durables, tractor and two-wheeler sales registered healthy growth. Investment activity exhibited buoyancy on the back of government's thrust on infrastructure spending, high capacity utilization, and revival in corporate investment in certain key sectors. Non-food bank credit rose by 15.4% year-on-year as on March 24th, 2023. The total flow of resources to the commercial sector has increased by 26 lakh crore during 2022-23 as against 19 lakh crore a year ago. Merchandise exports and non-oil, non-gold imports contracted in February. Services exports continued to register robust growth. Supply chains are returning to normalcy globally as well as domestically. Looking ahead, the higher Rabi production has brightened the prospects for agriculture sector and rural demand. The steady growth in contact-intensive services should be positive for urban demand. The government's focus on capital expenditure, capacity utilization above long-period average, and moderating commodity prices should bolster manufacturing and investment activity. The drag from the net external demand may continue due to increased global headwinds. The protracted geopolitical tensions and global financial market volatility pose downside risks to the outlook. Taking all these factors into consideration, the real GDP growth for 2023-24 is projected at 6.5%, with Q1 at 7.8%, Q2 at 6.2%, Q3 at 6.1%, and Q4 at 5.9%. The risks are evenly balanced. Let me now turn to inflation.